Hello friends, welcome to Veranda CA. So in this session, we are going to discuss about the various amendments which are applicable for those students who are writing in the month of December 2021, right? So we have roughly a month left for our exams. So discussing the amendments becomes really important. And if you talk about various subjects, indirect tax is the particular subject where amendments hold a very important place, right? From the exams perspective, from the marks perspective, amendments are really important in indirect taxes. Now, in this session, we are going to discuss about amendments for CA final. But if you see, majority of the amendments in majority of the chapters are common for both CA inter as well as CA final, right? So I will show you which are the amendments which are common for both CA inter as well as CA final, right? Hope all your preparations are going in full swing because we have approximately a month left for your exams. So wishing you all the best. Let's start now. Now, when we talk about amendments, first we will discuss about the various chapters which have gone through amendments. See, particularly for December exams, we don't have too many amendments as well. But yes, a decent number of amendments are there which are applicable for your December exams. So first, let me give you a brief about what are those important amendments related to various chapters, right? So the first, supply under GST, there's a single amendment, Schedule 2. So we had discussed supply chapter in detail earlier in our detailed classes. So supply chapter in Schedule 2, 7.1 capital A, Schedule 2, there is an amendment in classification para 4 that we will discuss. There's a single amendment, that's the only amendment applicable for your exams in this chapter 4, in this chapter supply under GST. Next, charge of GST. If you see charge of GST, major amendment, the important amendment, the only amendment we can say is relating to the composition scheme. Now, composition scheme, we have two schemes, right? 10.1 and 10.2A, right? So two options we have in composition, right? One, that if I'm a manufacturer trader and if my turnover is up to 1.5 crores, right? So I can pay a tax of 1%, 2%. We have various schemes, right? Now, 10.2A is about 50 lakhs limit, majorly for services where we pay 6% tax. So in that, they have made a small amendment to harmonize both section 10.1 and 10.2A that we will discuss in detail when we come to charge of tax. That's the only amendment in this chapter. Next, input tax credit. We have certain important amendments here, majorly 3 amendments. One is Rule 36.4 where we avail input tax credit in our GST 3B returns. So when I file my GST returns, I claim credit. So there's an amendment. The percentage is reduced from 10 to 5%. See, when I go to the respective chapter, respective slides, I will be discussing the background and then I will explain you the amendment. I'm just taking a very small synopsis here to give you an overall idea of what we are going to discuss in the next few hours, right? So input tax credit, one amendment will be regarding availment of ITC. Another amendment, if you see, is relating to debit notes. Time limit to claim input tax credit relating to debit notes. And the third amendment in this chapter is there is an insertion of a new rule, Rule 86B, which puts a limit on the claim of ITC as per the electronic credit ledger. So this Rule 86B in input tax credit chapter, which says that when I utilize ITC to pay tax, I cannot use more than 99% in specified scenarios. All these things we'll discuss in detail with illustrations when we go to the particular slides. Then registration. So in registration, they have done certain changes in other authentication, the time limit to apply for, to grant approval for registration or to issue a notice or to respond to the notice. So there are certain changes in the time limits in registration. Thereafter, cancellation of registration. So there are certain new scenarios added because of which a proper officer can cancel a GST registration. Thereafter, suspension of registration. So whenever an officer wants to cancel, or let's say he's having a doubt on the activities of a business, he can suspend a registration and thereafter monitor or go through the process, either approve it, either let it go or cancel the registration. So we will see those scenarios about suspension of registration in this registration chapter. So majorly these three are the areas of amendments in this registration chapter. Then coming to tax invoice, credit and debit notes. Now in this chapter of tax invoice, major thing is we are going to talk about is e-invoice, electronic invoice. There are certain amendments. They issued a circular about dynamic QR code. So what is that code? What is e-invoice? Everything we are going to discuss in detail when we go to this chapter of tax invoice, credit and debit notes. As I said, I am just giving a synopsis now of what are the amendments. When I go in that respective chapter, I will be discussing each and every point with the background and the amendment in detail with illustrations. Next, accounts and records, e-way bill. So e-way bill, there are a couple of amendments. One is regarding the time limit. See, when I move goods from one place to another, there is a time limit within which the goods should reach the destination. So let's say example, from Chennai, I am sending goods, let's say to Mumbai, from Chennai to Mumbai. So there's a time limit based on the kilometer within which the goods should reach the destination, because the e-way bill has a validity. Now that kilometers have been changed from 100 to 200 kilometers. So that's one major amendment in e-way bill. Next is regarding blocking of e-way bill. That also we will discuss in this chapter. Then comes returns. If you see in this chapter returns, we have certain major amendments. I would say the major highlight of these amendments for your exams is returns chapter and tax invoice. Because e-invoice you can definitely expect a question in your exams in December, and returns definitely again you can expect a question, because there is a detailed scheme for filing of returns which is called as QRMP scheme, quarterly returns monthly payment scheme, which is introduced in your returns chapter, right? So that scheme is a very detailed scheme, and definitely you can expect a question in your upcoming exams. So that scheme we are going to discuss in detail in this returns chapter. Again, I am saying it's a very lengthy chapter from the amendments perspective, I am saying, because the entire scheme will be discussed in detail, right? Next, refund. Again, we have a couple of amendments in that we'll discuss. There's a basic clarification in the definition of claiming input tax credit when you export goods without payment of tax. We'll discuss in detail in that chapter. Then the last chapter in GST is offences and penalties, where you have certain changes. Offences and penalties, there's section 122 and section 132. 122 talks about the respective offences when a person does such offences. Let's say example, I supply goods without an invoice, or I supply invoice without goods. There are offences which are defined for which there is a penalty equal to the tax evaded, right? So there is an amendment in that. There is an insertion of a clause 122, and section 132 is about arrest. So in that arrest also they have made an amendment. So majorly two amendments in this offences and penalties chapter. So if you see, I have given you synopsis about amendments relating to GST syllabus. So all the major amendments are covered in these chapters, right? So these are for CA final, right? Now I said you majority of the amendments are same for CA inter and CA final. So if you see here, supply, charge, ITC, registration, tax invoice, right, are all common for both your inter and final. Accounts, records, e-way bill also, returns also, right? So refund and offences alone is not there in your CA final, CA inter. So all these amendments for CA final, and these two chapters alone are not applicable for CA inter, because it is not there in the syllabus at all for CA inter. So for what I am going to discuss from this to returns is same ditto for CA final as well as for CA inter. So only I said this is for CA final, but yes, if any student who is a CA inter can also watch this. Till returns, all the amendments are same. Then very limited amendments in customs and FTP. If you see, in customs there is only one chapter where there is an amendment, which is levy of exemptions from custom duty. So basically if you see, concessional duty rules which came in 2017 has been modified, has been amended. So that rules are only discussed in this amendment, right? So rule 4, rule 6 have been substituted, rule 7, rule 9. So all those rules we are going to discuss in this. So basically you can import goods without payment of custom duty or on payment of concessional custom duty for manufacture of notified goods or rendering notified services. So the procedures, how you should intimate to the jurisdictional AC or DC, Deputy Commissioner, Assistant Commissioner of Customs, your jurisdictional custom officer, all those procedures we are going to discuss in this. There's a major amendment. That's the only major amendment in this chapter, right? That the rules have been amended. Last is foreign trade policy. So foreign trade policy, if you see, the FTP policy was for 1520. From 2020 March it got expired, so it was further extended for 1 year. Thereafter they have further extended. Then there are certain schemes like advance authorization, right? EPCG schemes. So all those schemes, the benefit of import of duty without IGST and cess have been extended. So this I have summarized your various amendments which are relevant from the perspective of GST as well as customs and FTP, right? So this was a synopsis. Now we get into detail, right? And as I've said you, amendments are very, very important, really important, particularly the more so over in the subject of indirect taxes, because as you all know, it's almost 4 years since GST was implemented. So the law is going on with multiple changes. So hence amendments become really important from the exam's perspective, right? So let's discuss one by one, chapter by chapter. First, we are going to discuss about the amendment in supply under GST chapter, right? Let's see. So as I said, there's a single amendment in Schedule 2, Para 4. Now, just to recollect, just to give a background, supply chapter, section 7, subsection 1 has 3 clauses, just to recollect. See, 7(1)(a) says, all forms of supply of goods or services for a consideration by a person in the course or furtherance of business, right, is a supply, right? All forms of supply, let's say sale, transfer, barter, exchange, license, rental, lease, disposal, right? So the clause A says that a transaction for a consideration is a supply, right? Clause B talks about importation of service, right? Clause C talks about Schedule 1 transaction, right? Permanent transfer. So basically Schedule 1 talks about transactions which constitute supply without consideration, right? So any transaction to be called as supply, to be qualified as supply, should satisfy section 7(1), right? Either E or B or C. So for a transaction to be supply, 7(1) should be complied. Clear? If 7(1) is complied, then we go to Schedule 2, that is 7(1) capital A to Schedule 2. What is Schedule 2? Now Schedule 2 is basically a classification mechanism to say what are goods and what are service. I repeat, Schedule 2 is basically a classification mechanism to say what are goods, what are service. It does not talk about supply. See, when the law came in, there was a lot of confusion because Schedule 2 was part of the definition, so there was a lot of confusion. Schedule 2 is basically a supply or not. So that thereafter they made an amendment to that and they clarified, they made an amendment and they said that Schedule 2 is not a supply. 7(1), if it's satisfied, it's a supply. Then come to Schedule 2, see whether it is supply of goods or supply of service. Schedule 2 does not decide whether it is supply or not. I repeat, Schedule 2 does not decide. See, I will give a small example about Schedule 2. Let's say construction. I'm a construction company, I'm constructing a building. Now, when I'm constructing a building, I use cement, steel, but I use labor also, right? I will have my team of laborers who are constructing the property. So I'm using goods as well as service. So whether this construction is goods or service. So that is clarified in Schedule 2. Schedule 2 says construction is service. By default, construction is service. So Schedule 2 only defines, classifies what is goods and what is service. It does not define what is a supply, right? So thereafter they made an amendment to this. They had taken out Schedule 2 from 7(1) to say that yes, Schedule 2 is not saying that something is supply or not. It only says if something is supply under 7(1), then come to 7(1)(a) to see whether it is supply of goods or supply of service, right? Now, so in 2019 Amendment Act, they made an amendment. So Schedule 2 came out of 7(1). So thereafter it was clear that Schedule 2 is talking about only what is goods and what is service. It is not talking about supply, that something is supply or not. But there was still a confusion in para 4 of Schedule 2 even after this amendment. What was the confusion? Let's see. So transfer of business assets. See, whenever I transfer business asset, right, it can be liable to GST. But whether it is goods, if something is supply, whether it's supply of goods or service, we have to see in Schedule 2. Schedule 2 para 4 if you see. First one, where goods forming part of the assets of a business are transferred or disposed of by or under the direction of the person carrying of the business as no longer to form part of those assets. That means it is permanently getting transferred. I repeat, so as to no longer form part of those assets. That means there is a permanent transfer. Whether or not for a consideration. Now what is this whether? So this clause said transfer of asset, whether or not for consideration, whether it's for consideration, whether it's not for consideration, such transfer disposal is a supply of goods by the person. So this clause said it is supply of goods whether or not for consideration. There was a lot of confusion. Why? Because any transaction to be called as a supply without consideration, 7(1)(c), that is Schedule 1 only has a right to say, because Schedule 1 says there are 4 transactions, right? Permanent transfer, disposal of asset on its ITC is taken, cross charge transaction between distinct persons, right? Third is consignment agent, fourth is import of service. So 4 clauses, right? 4 para in Schedule 1 entry, right? So 7(1)(c) only can say that a transaction without consideration can also be a supply. How come in Schedule 2 they can say with or without consideration? So there was a confusion here. Why? Because whether or not for consideration words cannot fit in here, because Schedule 2 does not say what is supply. I will give you an example. Don't worry, in the next slide I will give an example. Similar, next slide if you see, whereby, so this is a permanent transfer, this is a temporary use put to private use or non-business use. So let's say example, my asset, let's say probably my car, which is an office asset, my office car, office asset, I put to private use. So let's say example, sometimes I use for my personal purpose, I put to private use, even for temporary period, it is treated as supply, right? Not supply I am saying, but it is treated as supply of goods or service that is given here. Whereby or under the direction of a person carrying on a business, goods held or used for the purpose of business are put to any private use or are made available to any person for use for any purpose other than a purpose of the business. As I said, for private use or for non-business use, right? This was permanent transfer. This is put to private use. Whether or not for a consideration, if you please notice here also, whether or not for consideration, the usage or making available of such goods is a supply of service. So here it says it's a permanent transfer, goods, here temporary put to private use, service. Now, but this point of whether or not for a consideration was creating confusion. Further I will give you an example to show why. Now, let's take an example. Laptop, right? So let's say a company purchased laptop, taken ITC and donated for charity. Illustration, this is an illustration. A laptop purchased by a company, they take ITC on that and then they donate for charity after some time. Now, is it supply? So, supply means 7(1), A, B or C. Here, there is no consideration. Here, there is no consideration. No consideration. So, something without consideration can be only Schedule 1. So, permanent transfer, the first entry, the first pair of Schedule 1, permanent transfer disposal of an asset, right, on which ITC is taken. So, ITC is taken without consideration, Schedule 1, right. Now, next example. Car purchased for the business. I cannot take ITC, so ITC not taken. Donated for charity. Illustration, whether it's supply or not. Car purchased for the purpose of business, ITC not taken, right? not avail input tax credit donated for charity, whether it's supply or not. Now if you see here, section 7, 1 ABC, right? Since it is without consideration, again I will have to travel to schedule 1. So permanent transfer disposal of an asset on which ITC is taken is a supply without consideration. But here ITC is taken. ITC is not taken, right? See, because schedule 1 para 1 says permanent transfer disposal of an asset on which ITC is taken, but here ITC is not taken. So this will not go under schedule 1. Then is it a supply? As per 7.1 it is not supply, but if you go to schedule 2, this transaction comes under the previous slide I showed you, because whether or not for consideration, ITC they are not given anything. There is no condition about ITC. Previous slide I showed you, transfer of an asset, permanent transfer of an asset. First clause we saw, right? 4A, previous slide. 4A, permanent transfer of an asset. Liable to is basically supply of goods, right? Whether or not for consideration. So whether or not for consideration is erroneously worded there, because without consideration only schedule 1 has a right. Schedule 1 has a right in the supply chapter to say that yes, even without consideration this transaction will still qualify as a supply. So this is not a supply. This transaction is not a supply, right? So only they were made an amendment in schedule 2 to remove in that para 4 with or without consideration. I hope now the concept is clear. I give you background and I have explained the provision in detail. Now next we go to the next chapter. Thank you means don't go back, don't go. In the sense I'm coming to the next chapter now, right? So charge of GST, next chapter, again single amendment, again a single amendment as I said in composition scheme, right? Now section 110 subsection 1. Section 10 subsection 1 talks about composition scheme. Section 10(2) gave conditions or conditions to be fulfilled to continue this section. In this section, section 10 subsection 1, that you cannot make interstate supply of goods. Right? You cannot supply goods to an e-commerce operator. Conditions like this. Section 10(2)A was introduced, right? Earlier, where they said that one more scheme of composition is introduced if your turn is up to 50 lakhs, but you will have to pay a higher rate. Higher rate, instead of 1%, you will have to pay 6%, 3% CGST, 3% SGST. But the conditions there and in 10(2) were a little different. 10(2) spoke about restrictions only in case of goods. 10(2)A spoke about goods or service. So they made an amendment here and inserted service word. That's it. I will just show you. So section 10(2) says the registered person shall be eligible to opt for subsection 1. That means 10 subsection 1 says if a turn is up to 1.5 crores, right, a manufacturer, trade or someone can avail the benefit of composition scheme. Pay tax at 1%, right? Conditions, right? Save as otherwise provided he is not engaged in the supply of services. He is not engaged in making any supply of goods or services which are not liable to tax on this act. Earlier the word goods was only there. Now they have inserted this word or services. I have put in bold or services, because in section 10(2)A also same clause is there, So to bring harmony, to harmonize both section 10(2) and 10(2)A, they have just inserted this word. Nothing major. He is not engaged in making an interstate outward supply of goods or services. So if, just to give an example, earlier if I was making interstate supply of service, I was still eligible. I was still not disqualified under this subsection. But now after this amendment, if I make an interstate supply, of service, I will not be eligible under this, because now goods they have inserted services. So let's example Swiggy, if I'm delivering food outside, right? So outside the state. So if any interstate supply, if I'm making an interstate supply of service, now onwards post the amendment, I will not be eligible under this. Just as I said, to bring similarity, to make no conditions same, 10(2), 10(2)A, they have just inserted the word service in another clause also. He is not engaged in making any supply of goods or services through an e-commerce operator who is required to collect tax at source. So earlier, pre-amendment, if I supplied goods, if I supplied service to an e-commerce operator, I was eligible. But if I make supply of service to an e-commerce operator, I am not eligible under this scheme. He is not a manufacturer of such goods as may be notified by the council. So as I said, nothing much in this section, nothing. just they've inserted the word service, so that 10.2 and 10.2a. What is 10.2a? As I said, majorly it was brought in for service, but majorly it says up to 50 lakhs turnover. If you are there, you can go under a composition scheme and pay tax at the rate of 6%. Other conditions remains the same, that you cannot collect the tax, you cannot take ITC, etc., etc. 10.2 basically was up to 1.5 crores turnover, right? So there also they have inserted the word service, so that 10.2 also has goods or service. Here also they made goods or service. That's it. Nothing else. Nothing else. Very simple amendment. He is neither a CTP or NRTP. What is CTP and NRTP? Casual taxable person nor a non-resident taxable person. This condition is anyway same in both. So there is no amendment here. Next. So we complete this chapter. We go to the next chapter, input tax credit. Charge of tax, supply. If you see both chapters, as I said, there was a single amendment only, which we have discussed in detail. Now we go to the next chapter, which is input tax credit. Time limit for availing ITC. Now we all know what is the time limit for claiming ITC, right? We all know, right? So very simple and basic question in the entire GST chapters, right? So time limit to avail ITC is for a financial year. Let's say example financial year 1920. The time limit to avail ITC is due date of filing September return for the succeeding year, right? So for 1920, 20th October 2020, or the date of filing annual return, whichever is earlier for 1920 financial. I will write and show you with illustration, don't worry. So that is the time limit to avail ITC. But there was a problem in debit notes that we will discuss in this amendment, that they have made an amendment, very important amendment. A registered person shall not be entitled to take ITC in respect of any invoice or debit note for supply of goods or services or both after, after the date of filing return under section 39, which is your GSTR 3B return, right, which is GSTR 3B return generally, and for the month of September following the end of the financial year to which such invoice pertains, or invoice relating to such debit note pertains of furnishing of the annual return which is earlier. So basically they are saying date of furnishing return under section 39, right? So let's say for the September it is 20th October, or the furnishing of annual return whichever is earlier, not the due date of annual return. Please note here, not the due date. Here it is due date for September return, due date, that is 20th October, but here they are saying date of furnishing annual return. So if I furnish annual return by, let's say, August, then August, or December, whenever you furnish the actual date of furnishing return, actual date, right? Now if you see one word here, or invoice relating to such debit notes, invoice relating to such debit notes, that is the key which I will be discussing now. So basically let's say example, invoice date, let's say 1st August 2019. So I can avail ITC by what date? So let's say the question says invoice date is this, right, and date of filing annual return, let's say is 31st December 2020, right? Now here due date for claiming ITC shall be, if you see here, due date for claiming ITC will be, since the invoice pertains to financial year 1920, so due date of filing September return for the succeeding year. So basically it is 20th October 2020, or date of furnishing annual return. Here in my example I have furnished annual return 31st December. If it is 18th August, I will take 18th August. If it is 15th October, I will take 15th October. If it is November, I will take. Whatever be the actual date we should take. So actual date of filing, I have done filing only on 31st December. So 31st December, whichever is earlier. Please note whichever is earlier. So earlier of the due dates, I can take my ITC. So any input tax credit pertaining to transactions, pertaining to invoices of financial 1920, I can take only by this date, right? Now Now we'll discuss the amendment. So this was the basic provision. First I give you a background, now we'll discuss the amendment. So let's say example. Date of invoice, let's say is 1st April 2020. 1st April 2020. Now, let's say date of debit note. First case, let's say example, it is October 2021. First example, date of debit note is 31st October 2021. Now, this debit note is pertaining to this invoice. See, practically I will give an example how it happens. See, I will give a very live example, okay. Many times it happens in automobile industry. So, let's say example, I am TVS, you are Hyundai. I am TVS, you are Hyundai. I am supplying goods to you. Now, let's say example, I am supplying goods to you at the rate of 100 rupees per unit. But I had made a request to you stating, see, presently also if you see in India, specifically in India, post-COVID scenario, the price of the commodities are touching sky high, right? Many commodities have now inflated by 100% increase in prices, right? So now what happens? So let's say example, I am TVS, I am supplying goods to Hyundai at rate say let's say rupees 100 per unit. Now I have requested Hyundai that I want to increase the price from 100 to 110, 10% increase. Hyundai says hold on, we have an approval process. Once it's approved, we'll let you know. So what happened? Let's say in this scenario itself, I raised the invoice on 1st April 2020. Thereon I kept raising invoice. What happened on 30th October 2021? That means after almost 1.5 years, Hyundai gave an approval that yes, because first they analyzed whether the increase is required or not. There was a various approval process. Then they came back and they said yes, it's allowed. Now, so with effect from 1st April 2020, whatever goods I sold, whatever invoices I raised, I am going to revise 10% increase in price. Invoices are already raised, so now I will raise a debit note, right? So on 31st October 2021, I am raising a debit note for the invoice which I raised on 1st April. Practical, very much practical. As I give an example, many times it might happen that I am raising an invoice to a company, and that the company, because let's say example, there could be some dispute also. So as a TVS, I raise invoice on day, there's some negotiation going on, there's some dispute going on about the quality, so the price increase is not yet approved. There could be many reasons, business reasons, practical reasons, because of which the price increase might be approved at a later date. Now, if I raise a debit note now, very many practical situations happen like this. So you might think that who will raise a debit note, but practically in many cases it happens like this. Now when I raise a debit note, a question comes in. Time limit to avail ITC for the invoice. For the invoice will be what? For 1st April invoice, it will be 20th October 2021 or date of filing annual return, which was earlier, right? Which was earlier. Now, what about debit note? Now, debit note date also, pre-amendment. Debit note date is irrelevant. If the debit note pertains to this invoice, then based on this invoice eligibility only, I can talk of claiming input tax credit. So here let's say date of annual return, I will give 31st December 2021, right? So last date of claiming ITC is 20th October 2021. We discussed the previous slide example, right? Which is due date of filing September return or 31st October. So answer will be last date for ITC will be 20th October 2021, right? So this will be the last date to claim input tax credit, right? Right? This will be the last date to claim input tax credit. Clear? 20th October 2021. Why? As I said in the previous slide, also I gave an example. What is the last date? How to arrive at it? Now, so if we go by this date of debit note, ITC on debit note. Pre-amendment, post-amendment. Now, so time limit for availing ITC on debit note, pre-amendment and post-amendment. Now, if you see here, pre-amendment. Now, what was the last date to take ITC here? Pre-amendment, it would have been 20th October 2021. So my last date to claim ITC was expired because I should not see from the date of debit note, I will see the date of invoice. So here, expired. I cannot take ITC here. It's expired. Time limit is expired because last date to avail ITC was 20th October. Time limit, but the date of debit note is, so I cannot take ITC, it's expired. Post-amendment, post-amendment. Now, the last date to ITC will be due date of September return. That is, so now here post-amendment what I will see the time limit based on this debit note. This date of debit note is delinked from the date of invoice. Now post-amendment, date of debit note is only important, date of invoice is not important at all. Please note, post-amendment, this is delinked from the date of original invoice. Simple. So based on this only I have to arrive at the time limit. Very simple amendment, but very, very important amendment from the practical scenario. So yes, you can expect an exam question from this amendment because from practical perspective, it was a big relief when this amendment came in. Many industries were wanting a clarification or amendment on this side, right? So if you see date of debit note, now this date only is important. So date of filing September return for this year 21-22 is 20th October 2022 or date of filing AR, annual return. So let's say I filed the AR on 31st December. I'm taking an example. Let's say 15th December. I filed the data of annual return I filed on 2022. So here answer will be I can take ITC up to 20th October. So this will be the time limit to avail ITC, and hence ITC is eligible since time limit is not lapsed. So I can still take ITC in this scenario. Clear? I have the concept is clear now. So I repeat, simple amendment, simple thing you have to remember is date of debit note is now only important, date of original invoice is not important. But if invoice is there, see the invoice date, and if a debit note is there, see the debit note date. Earlier pre-amendment, the date of debit note was irrelevant. We used to see the debit note is linked to which invoice number, against which invoice I have issued debit note. That invoice date was only relevant to claim ITC even for debit note. But post-amendment, delinked, date of debit note is only more important for the purpose of availment of input tax credit. Hopefully now the concept is clear. I have explained and deliberated in detail, right? We'll go to the next point. Now the above section is originally enacted, links the time limit to claim ITC on the debit note, right, with the financial in which the corresponding invoice is issued instead of financial year in which the debit note is issued, right? So hope the concept is clear. Earlier it was debit note linked to invoice, so invoice date was more important. Now invoice date is irrelevant, debit note date is only important to avail ITC. Simple, right? So with this we are done with this amendment. Now we will go to the next amendment in this ITC chapter, Rule 36.4. Now what this Rule 36.4 is all about? Let me give example. Now see, now let's say example, ITC as per books, let's say I have 1 crore, but ITC, so in a month I have received goods from various suppliers along with invoices. So my total ITC, let's say, is 1 crore here. Right? So let's say 1 crore. Now, so section 16 subsection 2 says 4 conditions to claim ITC. You should receive goods or service. I have received goods or service. I should receive an invoice. I have received invoice, right? I have received goods. I have received invoice. Supply should pay tax. Supply should, and I should file return to claim my input tax credit. Now, Rule 36(4) says one more condition. Rule 36(4) says one more point, that if I want to claim ITC, then my credit should reflect in GST 2A 2B. So let's say example ITC as per now. This concept we will be discussing in detail when we go to the tax invoice chapter, GST 2A 2B. So what is 2A 2B? It is already there in the original syllabus also, but again I will discuss in detail when I come to invoice tax invoice chapter. I will discuss in detail 2A 2B. So IT says for 2A 2B, that means my supplier would have filed return. I repeat, my suppliers would have filed returns who sold goods to me, supplied goods to me, that will reflect as ITC in my GST 2A and 2B. So I can view in that facility. So let's say example, ITC as per books is 1 crore, but in 2A 2B, let's say it's reflecting only 80 lakhs. So some of my suppliers would not have filed their GST returns. If they would have filed, the credit will reflect in my, so my suppliers charge me 1 crore tax. Let's say example, I had 100 invoices, suppliers charge me tax, 1 crore credit I have as per the books. But let's say out of 180 suppliers I have only filed return. Per supplier 1 lakh was the tax amount which they charged me. So 80 lakhs is only coming. Now, Rule 36(4) earlier said, initially when the rule came, it said 20%, then 10. Now from 1st January 2021, they made it 5. What is this 5, 10, 20 I am talking about? Let's see. Now here, if you see, here ITC to be availed in GST 3B will be how much? Will be eligible credit in 2A 2B, that's eligible credit, plus 5% only I can take. I cannot take my entire credit as per the books of accounts. So to the extent of eligible credit reflecting in my 2A 2B, plus 5% only I can take. So here if you see, I can claim only 84 lakhs. 80 lakhs plus 5% on that. Plus 5% on that. Why? Because this Rule 36(4) says you do business only with compliant vendors. Those who are doing delay filing, don't do business with them, simply. Law says we want to have a matching concept. When your supplier file, you take credit. If your suppliers file late, you take credit in the next month. So here, IT is my books of 1 by 1 crore, but here only 80 lakhs is there. So I can take only this plus 5%. Right? I cannot take 20 lakhs. I can take only plus 4 lakhs here. Gap of 20 lakhs, but I can take only 4 lakhs. Right? So 80 plus 4, 84 lakhs only I can avail. Earlier this was 20%, then they made it 10%. So what amendment here is, they have reduced this 10%. Amendment has reduced 10% limit to 5%. Right? So the 10% limit has been reduced now to 5%. So ITC you can avail, but yes, you have to verify your 2A 2B as per Rule 36(4), an important rule. Again, an important rule from the exam's perspective, Rule 36(4), that has been reduced to 5% now. So more than that I cannot take. One more illustration I will want to give you here. So let's say example, this 80 lakhs. Let me elaborate this example. So let's say 80 lakhs consists of ITC as per 2A 2B is, let's say, 80 lakhs, out of this let me mention out of that 70 lakhs is eligible, ineligible is 10 lakhs. Total is 80 lakhs. So I have elaborated my example now. The 80 lakhs which is reflecting my 2A, 2B, out of that 70 lakhs is eligible, 10 lakhs is ineligible. Total ITC as per books is 1 crore. Now here again comes the question, how much credit can I avail here? How much credit can I avail here? Now, %, rule 36(4) says you can take 5% to the extent of eligible credit reflecting in 2A, 2B. So ITC extent of 5% of eligible credit. So eligible credit is only 70 lakhs, not 80 lakhs. So that's a catch here. Please be careful when they test a question in exam. Don't take the total credit as per 2A, 2B, eligible credit only. So 70 lakhs. So answer will be total ITC to be availed will be 70 lakhs plus 5% of that. So basically 3.5 lakhs, because this is 5%. Hope the concept is completely clear to you, right? So basically earlier the provision was shall not exceed 10%. Earlier the point was you cannot take credit more than 10%, right? See, input tax credit to be availed by registered person in respect of revenue invoice notes, the details of which have not been uploaded by the supplier in subsection 1 of section 37. 37 talks about GSTR1, who have not uploaded, because only if my supplier files in GSTR1, the ITC will reflect in my GSTR2B. If it doesn't file return, credit will not reflect. In my previous example, up to credit of 20 lakhs, my suppliers failed to file the returns up to the due date for GSTR1 as per section 37, right? So those who file only, it will reflect. Further in detail concept we'll see when we come to the tax invoice chapter, right? So tax invoice or returns chapter will discuss in detail. Shall not exceed 10% of the eligible credit available in respect of the invoice or debit notes, the details of which have been uploaded by the suppliers. So it cannot exceed 5%. Of this has been amended to 5% now. So here if you see further, there's a change. Details of which have not been furnished by the suppliers in form GST1 or using the invoice furnishing facility. This is generally called as IFF, invoice furnishing facility. Now what is this IFF all about? We will discuss in detail when we come to returns chapter. As I told you, QRMP scheme. This is a part of QRMP scheme. This is a new scheme for filing GST returns. I said it is important for exams. IFF is a concept which is part of the QRMP scheme, which we'll discuss in detail when we come to the returns chapter. There I will discuss in detail about GSTR2 and 2B as well, right? Now, shall not exceed 5% of the eligible credit available in respect of these invoices. Earlier 10%, now they made it 5%, right? Earlier it was 10%, now it is 5%. Right? So this is the important amendment here, 10 reduced to 5%. Now coming to the next important amendment. Instead this is a new insertion, a new rule is introduced, Rule 86B. Now this Rule 86B is important from exams perspective again, because it made a big difference in the in the way we claim input tax credit. So I'll give you an example what this talks about, right? Now I will give a small example to explain this entire rule 86B. Simple example. So let's say goods supplied worth 10 lakh rupees, GST at the rate of 18%, 1.8 lakhs. Now, so for the month I will have to pay 1,80,000 rupees to the government, right? Now, here see what the lawmakers have told here is, let's say example, okay, let me take ITC also. Let's say I have ITC. Already have ITC of, let's say example, 2 lakhs. Already have ITC of 2 lakhs. Now here, if you see net liability, pre-amendment, post-amendment. Pre-amendment, how much I will pay tax? Net liability through cash. How much I will pay? Net liability through cash? 0, because liability is 1.8. I have ITC of 2 lakhs. Net liability to be paid is 0 because I have excess input tax credit with me, right? But now, as per rule 86B, if you see here, it says if this rule is applicable, let me take 100 lakhs, and because up to 50 lakhs there's a catch here which I will explain you when I come to the provision. So let's say 18 lakhs. Why I have changed this 10 lakhs example to 100 lakhs? I will give you a reason. I will give you the reason in the next slide, because this rule is not applicable if my turnover is below 50 lakhs. So 10 lakh example I cannot take, that will be ineligible for this scheme. So only I have changed. I will explain you in detail in the next slide. So let me take my example, 100 lakhs. So 1 crore worth of goods I have sold, 18 lakhs, 18% GST. So ITC as per books, let's say I have 20 lakhs, right? So 1 crore worth of goods I have sold, 18% GST payable, but already have ITC as per books 20 lakhs, so no tax to be paid to the government. But as per rule 86B, through cash I have to pay 1% mandatorily. So only 99% I can adjust through cash ledger. So here if you see, %1 of 18 lakhs I will have to pay through cash ledger mandatorily, 18,000. Because 1% of 18 lakhs I will have to pay. So how much I can adjust through credit ledger? Through ITC, how much I can pay? How much I can pay through ITC? I can pay 18 lakhs minus 18,000 I can pay it through electronic credit ledger. So basically 17.62 lakhs, right? So 17,60,000 I can adjust through credit ledger, but 1% of the gross liability. So if you please note, it's a very simple rule, but yes, mistakes can happen here. So be very careful with the calculation. Gross liability, whatever your gross liability is 18 lakhs. Of that, 1% you pay in cash. So government wants money from you in cash form, not through credit. Government wants at least 1% payment should be made by you through cash. Government needs funds, so they've said yes, 1% definitely will have to pay through cash portion. So 19% you can pay through credit, but 1% you will have to pay through cash ledger. Now, question comes in your mind probably, that is this applicable to everyone? So I might be having huge input tax credit. Let's example, I have set up a new plant. So new factory I have set up, I would purchase huge machineries, I will have huge credit with me. then why do I need to make payment through cash ledger when I have huge money in my credit ledger? So they say this provision is not applicable to everyone. There can be practical challenges, practical scenarios. So they say this situation is not applicable to everyone. I might be a small trader, I might be a small businessman, I might be a small service provider, I might be a small manufacturer. So they say that up to 50 lakhs, this scheme is not applicable. Only for monthly turnover. I repeat, here we are not talking about aggregate turnover. Here we are not talking about previous year turnover. Here we are only talking about turnover in a month, which is 50 lakhs. So small businessmen not applicable, but if turnover is above 50 lakhs, then yes, this rule 86B is applicable to you. Further, there are a few more exceptions. We will discuss. So this rule is there, applicable to everyone except few of them. Who are those? We'll discuss in this rule, right? Let's proceed now. So I hope this concept is clear. Now we'll go to this is the provision. Rule 86B. With effect from 1st January 2021, a new rule 86B has been inserted to restrict the amount available. See, so this came in from 1st January. Amount available in electronic credit ledger which a registered person can use to discharge his output tax liability to 99%. Right? So ITC I can use through for making payment only up to 99%. 1% through cash, right? Of such liability in case where the value of taxable supply other than exempt supply and zero rated supply in a month exceeds. So other than, please highlight, other than exempt supply and zero rated supply. So they are saying that 99%, okay, right? But where the value of taxable supply other than exempt and zero supply in a month exceeds 50 lakhs. So they are saying this provision is not applicable to everyone. Here they are not talking about the tax amount. Please note here they are talking about value of taxable supply. Please note here they are talking about value of taxable supply. Value of taxable supply should be more than 50 lakhs in a month. So in that month, if your liabilities, your value of taxable supplies is less than 50, this rule does not apply. Next month, if it is more than 50, this rule applies. So it's talking about a month. So please be careful because generally in a common parlance in the GST law, we always talk about aggregate turnover for a financial year, for the preceding financial year. But here we are talking not about aggregate, but the value of taxable supplies, not the aggregate turnover. Normal billing we are talking about, normal turnover for a state, right? And value of taxable supply, but excluding exempt supply and zero rated supply. Exempt supply includes non-GST supply also. Please recollect section 2 subsection 47 definition. Exempt supply includes non-taxable supplies, right? Non-taxable petrol, liquor, all those petroleum products plus alcoholic liquor for human consumption, right? So every month taxable supply C, reduce exempt, reduce zero rated and arrive at the value. If that exceeds 50 lakhs, then yes, rule 86B becomes applicable. 86B becomes applicable. 1% minimum of the gross liability you will have to pay through electronic cash ledger. Clear? I hope the concept should be very, very clear to you. This rule overrides all other rules. This rules overrides all other rules, right? Next. So total supply minus zero rated supply minus exempt supply should be more than 50 lakhs, right? So get more than 50 lakhs, the value should be minus zero rated minus exempt. If it is more than 50, yes, rule applicable, subject to certain exceptions which we will see now. Subject to certain exception which we will see now, right? I have given an example also. I hope the concept is very clear, right? Now let's see the exceptions. So this restriction, that means this rule 86B shall not apply in the following scenarios. Four scenarios, we'll see one by one. First, payment of income tax. Now, payment of income tax, if you see, with the said person, so let's example, if a proprietorship concern, person, proprietor, karta, HUF means a karta, the managing director, the MD of the company, right? Any of its two partners, if it's a partnership of any of the two partners, whole time that all the whole time directors of the company, members of the management committee of association, or if it is a trustee, the board of trustees. Now, if these people pay an income tax in IT return, have paid income tax of more than 1 lakh rupees in please note here, in each of the last 2 financial years. In that case, in each of the last 2 financial years, in that case, this rule will not apply. So let's say example, I am an HUF, I am a Karta, I am running my business, and if I paid income tax of more than 1 lakh rupees in each of the financial year, it's not that 1 year I paid 2 lakhs, 1 lakh 0, 1 year 2 lakhs, 1 year 0, it's not cumulative basis. In each year you should qualify this condition. So in each of the last 2 years you should have paid. Now let's say example for financial 2021, financial year 2021, can I see or not this condition? I cannot see. Why? Because the financial 2021, the time limit to file returns is still not expired. So only if you see in the bracket here, compare those last 2 years for which the time limit to IT return is expired, right? For which the time limit to file return of income under section 139(1) has expired, right? So someone should have paid, the proprietor, the Karta, any of the 2 partners of the board of trustees, they should have paid IT of the trust or of that partnership firm, if they have paid income tax of more than 1 lakh in each of the 2 financial years, right? So for, if you see in the current month, October 2021, I want to check the eligibility, applicability. Then previous 2 years for which IT return is expired is 1890 financial year and 1920, right? See example. For applicability in, let's say, July 2021. So let's say you are in July 2021. Now you are checking the applicability. So relevant financial year will be 1819 and 1920. Why? Because 1819 is expired, 1920 is expired, 2021 is still not expired. Even today in October also, because of the COVID, the due dates have been kept on extending, right? So these 2 financial years, each of the financial year, if the income tax paid is more than 1 lakh, then this clause, this rule 86B is not applicable to them, because if someone is already paying so much tax, their genuine tax pays, probably government doesn't want to harass them. Fine, no problem. Next exception, refund of ITC in case of zero-rate supplies or inverted duty structure. So if someone has received a refund of more than 1 lakh rupees, then this rule does not apply to them. So if the registered person has received a refund of more than 1 lakh rupees in the preceding financial year on account of unutilized ITC in case of zero-rate supplies without payment of tax or inverted duty structure, in that case this rule 86B does not apply to them. Rule 86B does not apply to them, right? So see, the logic is they are saying that if I have done inverted duty structure, what is inverted duty structure? If my rate of inward is higher than rate of outward. So my raw material is at 12% and my output is under 5%. Or if I have made export supplies or SEZ supplies without payment of tax and I am claiming refund, and I have received a refund, not applied, received a refund. Please note it is received a refund. So if I have received a refund of more than 1 lakh rupees in the preceding financial year, in that case in the current financial year, this rule 86B cannot be applicable to me, right? So government is saying then you have a huge refund coming in. Government is already verifying your records and giving you so much refund. Then fine, we will not ask you to pay in through electronic cash ledger, because already I am claiming so much refund, eligible. So government saying no problem, we will not ask you to pay tax in through cash ledger. Next, rarely government says this, but yes, here government has said don't pay through cash, no problem here. Now when I am talking about cash, please don't think the literal cash money, right? It's not that. I'm talking about cash means in basically through your banking channels you will have to make payment of tax through e-cash ledger. this I will give an example because it is a little tricky here. Let's see the provision first, then I will give an example, right? Where the registered person has discharged his liability towards output tax through electronic cash ledger for an amount which is in excess of 1% of the total output tax liability. If you see total tax liability, one catch here is applied cumulatively. Please note, applied cumulatively. So, out of the total tax liability, cumulatively also, if I paid more than 1% in excess, cumulatively up to the respective month. So, let's say example, I am in August month, or let's say the actual situation, I am in October 2021. I am in the month of October 2021. Now, if I am in the month of October 2021 and I want to pay my tax for the previous month, so I can see that cumulatively from April 2021 till previous month, if I have paid tax of gross liability, if cumulatively also total all the months, if I paid more than 1% in cash, then no problem. In this month I can pay the entire amount through cash. This rule credit, this rule will not apply to me. I will give example, don't worry. Up to the said month in the current financial year. Up to the said month in the current financial year. So till the current month. So this month, if I am checking the applicability, till the current month I have to see total gross liability, total amount paid through cash. Till the current month I have to see, right? Now, example. So let's say, let me take an example. April, May, June month, right? Month, gross liability, right? So I will take, so basically for the month of April, May, June, I will take a gross liability, let's say 10 lakhs each. Let's say, so every month I have a gross liability of 10 lakh rupees, right? So so through cash, let's say here I paid 50,000, right? Right, and through credit I paid, let's say 9.5 lakhs. Here, when I come to May, so for the month of May, 10 lakhs liability. So for the month of May, if I want to check the eligibility, if you see, cumulatively also, if you see, I have paid more than 1%. I paid more than 1% because 50,000, 5% already I paid. So next 3 months, no problem at all, right? So if you see every month, if you see here also, if you see, my cumulative taxes paid is 50,000 rupees, right? So total 20 lakhs, I paid 50,000 rupees. So still it is 2.5%. I paid 50,000 divided by 20 lakhs, right? Still it is, right? So because if you see 20 lakhs, 1% will be 20,000 rupees, but I paid more than 20,000 rupees, simple here, simple, right? So cumulatively also, if you paid more than 1%, no problem. So for the month of May, rule 86B won't apply. As cumulatively tax paid through cash is more than 1%. Clear? So both months rule 86B, what I have written is both months rule 86B won't apply as cumulatively tax paid through cash is more than 1%. Tax paid through cash is more than 1%. So this rule 86B will not apply here, because here this month also if you see 20 lakhs, I paid 50,000, right? Cumulative also if you see 30 lakhs in this month, June month also 30 lakhs, 1% is 30,000. Cumulatively already I paid 50,000. Getting my point? 30 lakhs cumulatively I should pay 1%, 30 lakhs, 1% in cash here also till date. I paid 50,000. So here also I can, rule is not applicable. I can utilize, if I have input tax credit, full amount I can utilize to electronic credit ledger, right? Of this concept is clear, very simple rule, but you have to just remember the trick. Here also if you see, you have to apply cumulatively, because when you are working out the problem, you might forget this condition, and every month you think, see here tax liability is 10 lakhs, so sale is let's say 18%, so more than 50 lakhs, right? So that's the reason 18% is coming to 10 lakhs. So such conditions applicable. You might think that yes, then section applies, rule applies, and then you start computing. Please be very careful. Cumulatively you have to keep checking every month. Cumulatively in this month, whether I paid 1% from the beginning through cash, then this rule does not apply. Next month, cumulatively if I paid through cash, then this rule does not apply, right? Next. Last, whether the registered person is government department, public sector undertaking, local authority, statutory body, in that case, this rule does not apply. So this rule does not apply. See, rule 86B says when the person, registered person is a government department, we don't want to apply them this rule. PSU, public sector undertaking, this rule does not apply to them. They can pay entire amount through credit ledger. Local authority, statutory authority, in that case also this rule does not apply to them. They can pay the entire amount through credit ledger also. This rule does not apply to them. Clear? Now, thank you. Now we come to the next chapter, registration. Now registration chapter, what are the important amendments? Let's see what registration chapter is talking about. Now, registration chapter, as I said, simple amendments. They are talking about the time limits, then they are talking about cancellation, then they are talking about suspension. Three important provisions. Amendments are there, we will discuss in detail, because there are certain nitty-gritties attached to that, we will discuss, right? So first, section 25(6)(d). So persons, see, earlier there were certain persons who were exempted from Aadhaar authentication. See, because it's all Aadhaar based registration nowadays, right? So certain persons were exempted from Aadhaar, others are required to. That list has been modified. Let's see. Now, so earlier following persons, so persons who are exempt from Aadhaar authentication, right? So following persons were notified, right? Who? A person who is not a citizen of India, person who is not a citizen of India, he need not get Aadhaar authentication, does not apply to them. Then a class of persons other than the following persons. So persons other than these are exempted, right? So individual is not exempted, authorized signatories, they are not exempted, they will have to go through Aadhaar authentication. But anyone other than that, yes, they are exempted for Aadhaar authentication. Individual, authorized signatory of all types, managing an authorized partner, Karta of NCF, they are required to go through Aadhaar authentication. Other than these, but instead of this, they have said to whom it is not applicable. Here it's a negative clause. See, they are saying other than these exempted. Now who are exempted, they have clearly defined. These are the people who are exempted. Here they have said anyone other than these, anyone other than these are exempted. Other class of persons. What are other class? So here they have clearly said these are exempted from Aadhaar authentication. Who? A person who is not a citizen of India, same. Then department or establishment of state government or central government. Government departments or any establishment under the government, any department of government not required. Local authority, statutory bodies, public sector undertaking, PSU, a person applying for UIN, unique identity number. What is this UIN? See, like embassy, consulate, they don't have a GST number, right? They can have a UIN number because the outward supplies are exempted. They are not liable to pay tax. Plus in the inward they can claim refund, right? So for that they have to have a unique identity number. So all these, they are not required to go through Aadhaar authentication. Simple. After the amendment, these are the persons who are not required to undergo Aadhaar authentication when they apply for GST registration. Simple, right? Next, revised time limits. Now what are these revised time limits for registration? Let's see. Rule 9 of the CGST rules, which provides provisions relating to verification of the application for registration approval, has been amended with effect from 22nd December 2020. Now, see, when I apply registration, GST registration, if the documents are all right, within 3 days, they have to approve or issue a notice. See, either if it is all right, they will approve. If it is not proper, they will issue a notice. Both are to be done within 3 days. Now, both limit have been extended to 7 days. So, if I submit an application, if it's all right, the officer should give me a grant registration within 7 days. If it is not all right, issue a notice within 7 days. Both were earlier 3 days extended to now 7 days. The time limit for approving the grant of registration, right, if the documents are found in order, has been increased from 3 days to 7 working days. That's it. So, earlier it was 3 working days, please note here it's working days. Now it is 7 working days. That's it. So, if everything is found in order, the officer was supposed to approve, required to approve mandatory within 3 days. Now it has been extended to 7 days. A little more time has been given to the GST officers. See, why the time limits have been extended is simple, because a lot of frauds were reported in GST where people have taken fake registration, the name of the driver, in the name of servant, to issue fake invoices for availment of input tax rate, etc. So, registration has become little more, I can say little more compliant, because a lot of documentation procedures, time limits have been extended so that a proper officer can properly check and if required conduct a physical verification of the premises and then accord the GST registration, right? Next. Now, if there is a physical verification, so for the time limit for grant of registration after physical verification, where a person fails to undergo other authentication or does not opt for the authentication, has been reduced to 30 days from 60 days. See, if a person does not opt for other authentication or other authentication failed, let's say the OTP, there was an error or some reason, the other authentication failed. If the authentication fails, the proper officer will generally physically visit the premises and then give the number, then only give the number. So, if the officer will visit the premises, then they say, then we give you time limit up to 30 days. Earlier it was 60 days. That has been reduced. That because 60 days become a huge time limit, the officer is supposed to verify and grant the GST registration. So, the time limit here is reduced from 60 to 30 days. So, here if someone is opting for no other or fails, then within 30 days the verification should be the premises should be physically verified and registration should be granted within 30 days. So, within 30 days, see, it's not that 30 days from the date of physical verification. From the date of application, within 30 days I should do physical verification, then give the approval. So, only if you see time limit for grant of registration, right? Next, the time limit for issuance of notice. As I said, notice also from 3 days they are made to 7 days. So, if someone submits an application to me, I do not found that in order, I have to issue a notice earlier 3 days, within 7 days, right? Time limit for issuance of notice with the application is found to be deficient either in terms of an information document or the proper officer requires any clarification, has been increased to 7 working days from 3 working days. Again, working days, remember, right? So, from the date of submission of application, if there are certain clarifications required or there are some deficiencies in the documents or information provided, in that case I have to issue a notice within 7 working days. Earlier it was 3 working days, right? Next, further time limit for the issuance of said notice to a person who fails to undergo Aadhaar authentication or does not opt has been increased to 30 days from 21 days. So, if I issue notice, let's say someone fails to undergo Aadhaar authentication or does not opt for the authentication, right? In that case, I have found some lacuna in that, or so let's say there's deficiency in documents or something, then I need little more time, right? Because within 30 days I will verify, right? I'm supposed to give, but if there is some deficiency, then I can issue notice. So, within 30 days I can issue a notice if there is any deficiency in the registration applied where the other authentication has failed. Deemed approval of registration. See, within respective specified days, if I do not take action, let's say example within 30 days, I was supposed to physically verify and give the number. If I'm not doing, deemed to be granted registration, deemed automatically. So, I am sitting at home and automatically get a number, I get an email confirmation, deemed to be granted. Why? Officer did not take action within 30 days. Or officer issues a notice within 30 days and I give a response to him, then within 7 days he should approve registration. If that he does not do, again deemed approval. Or generally within 7 days he should approve if it doesn't do, if everything is in order. then still deemed to be granted. Let's see all the three scenarios. Whether registration should be granted after physical verification who fails to undergo Aadhaar authentication, or whether proper officer fits, physical verification is required. The first situation, within 30 days from the date of submission of application, as I said, they have to physically verify and give a number. 30 days they do not do, then it is deemed to be approved. Next scenario, the persons other than the above, that means who have opted for Aadhaar authentication and it's completely complied, Aadhaar authentication is done, then within 7 working days I should do it, otherwise deemed to be approved. Next, proper officer issues notice seeking clarification, information, documents from the applicant. So the proper officer issues a notice stating give me clarifications, there is a deficiency in your documentation. In that case, the notice is issued, then in that case the assessee, the person, gives a clarification. Within 7 days of receiving the clarification, I should grant registration. If I don't, deemed to be approved. So 7 working days from the date of receipt of clarifications or informations from the taxpayer, from the person, the officer should approve, because it's all 7 days, right? So if there is a deficiency, if you should notice within 7 days, I should again, when the taxpayer, the person is giving clarification, so again that 7 days comes into the picture, then within 7 days, yes, I should approve it. Let's see a chart to summarize the anti-approbation. Let's see a chart. The proper officer examines the application and accompanying documents, right? So documents are submitted, the proper officer verifies. If found in order, so if the same are found in order, yes, very good, badai ho. If it's found in order, then yes, within 7 days from the date of submission of application, the proper officer shall grant registration. Because if it's found in order, we saw the first point, right? If it's found in order, no means I have to issue a show cause notice in 7 days. But if it's fine, yes. And no means if it is Aadhaar authentication failed, then 30 days, right? Otherwise 7 days. So proper officer issues notice. Normal scenario, Aadhaar authentication fails, right? So if no, then proper officer issues notice electronically within 7 working days from the application submission, right? So it's a normal scenario, within 7 days I should notice if there is a deficiency in the documentation. And if Aadhaar authentication is failed or something like this, then 30 days I should issue a notice, right? So notice will be issued either 7 days or 30 days in such scenarios. Now what happens? I have issued notice, officer issued a notice, then what happens? Again, applicant has issued the clarification information documents after 7 working days from the receipt of notice. So in that case, within 7 days it has to be, we saw in the previous slide, right? When the notice is issued, applicant furnishes after 7 days, then it's a problem. Then officer may reject the application. Because everything happened within 7 days. Everything everywhere it is 7 days. But if the applicant has furnished the clarification within 7 working days, within 7 working days applicant submits, then if it's in order, the proper officer should grant registration within 7 days. We saw in the previous slide, last class, right? Otherwise deemed to be approved. So if the proper officer is satisfied, good, very good, congratulations, proper officer will grant the registration. But if not satisfied, he will reject it. And if it is satisfied, within 7 working days he should do. There's a link here. Within 7 working days from the date of receipt of communication, he has to approve the registration certificate. Hope the concept is clear. Simple. Whatever I explained you, we have discussed through the chart also. Very simple. But yes, as I said, there are certain nitty-gritties attached to this amendment. Right. Next, now we're going to talk about cancellation. Alright. So violation of condition to make the GST registration liable to cancellation. Right. Now, Rule 21 prescribes contraventions based on which proper officer can cancel the registration of a registered person. Right. So, in this rule, Rule 21, there are basically 8 clauses. Rule 21, there are 8 clauses that there are only 8 clauses basically for registration cancellation. That let's say you don't file your returns for 6 tax period for filing monthly returns or quarterly returns, those who don't file the returns for 3 consecutive quarters. So if you take a voluntary registration and you do not start your business within a period of 6 months, so there are various reasons for which registration can be cancelled. And the last clause is for various contraventions. In the Rule 21, those contraventions basically are extended. Now they've inserted 3 more clauses, E, F and G. So those clauses alone we are going to see now. I repeat, if someone contravenes with the provision of the GST law, the number can be cancelled. Now already there is a list. In the list, last clause is prescribed contraventions. In that There were 4 contravention. Now further 3 has been added, E, F, G. So what are those contravention? If they do, the number will be cancelled. Let's see. So avails ITC in violation to the provision of section 16 of the act or the rules they made in that. That means what is section 16? Section 16 says that you can take ITC only after receipt of goods. You can take invoice only on the basis of the strength of an invoice. So if you don't comply without receiving invoices, you take credit, or without receiving goods, you take credit. You violate the section of section 16, then your registration is liable for cancellation. So they can cancel. That's, as I said, the list is extended. That's it, nothing else here. Second, furnishes the details of outward supplies from GST 1 for one or more tax periods which is in excess of the outward supplies declared by him in his valid under section 39. So basically here GSTR 1 liability is more than GSTR 3B. Why someone will do like this? Think about it. Think about it. Why someone will do like this? See, let's example, I am filing my GST returns. In GSTR 1, I have declared 1 crore liability, but I don't have money to pay tax. I have to pay tax in GSTR 3B, right? So 1 crore, I have to pay tax, right? So 1 crore I have to pay tax as per GSTR 1. But in GSTR 3B, let's say probably I pay only 80 lakh rupees. So here, since in GSTR 3B, I am paying only 80 lakhs, there is a mismatch. Why? Because in GSTR 1, I need not pay any tax. I repeat, in GSTR 1, I need not pay any tax. But in 3B, I have to pay tax. So if I have limited amount with me, I repeat, if I have limited amount of tax with me, money with me to pay tax, I will underreport my liability in GSTR 3B so that I am compliant and I am filing my returns, because otherwise my registration can be cancelled. Why? Because if I do not file my returns, my registration can be cancelled, my EV bill can be blocked, there are a lot of complications attached to it. So someone can do like that. So they say if you do like this, that regularly report your liability in 1 more, 3B less, your registration we can cancel, right? So we'll see the next conditions once again. So E, F and G clause. As I said, 3 clauses are inserted, right? The next clause is violates the provisions of Rule 86B. Now it's very simple, because 86B already we have discussed in ITC chapter. What we have discussed in the amendments? 86B, minimum 1% I have to pay through cash ledger, right? So if someone is liable to follow Rule 86B but violates, does not follow Rule 86B, then his registration can be cancelled. So cancellation, already there is a list. 3 new clauses have been added, which are these 3. Simple, clear, right? Done. So this talks about Rule 86B, someone violates. Next, now we are talking about suspension of registration. See, as I said, if the government wants to, the department wants to keep someone under watch, they can probably suspend and do the investigation activity and then grant the registration, or probably continue the registration, or cancel the registration. So let's see the provisions about suspension. There are certain more clauses added for suspension. Now first here they made an amendment here. They've said, see, under sub rule 2, Rule 21A, sub rule 2, there's an amendment. Sub rule 1, no amendments, I have not discussed there. Sub rule 2A, it says, see, if an officer wants to suspend my registration, right? Earlier what happened was, he should provide me an opportunity of being heard. So let's say I'm a taxpayer, suddenly an officer feels, no, Sumit is doing some wrong activity in the business, let me suspend his registration. So he'll give an opportunity of being heard. He will say, Sumit, he will send me an email or notice will come stating that we have noticed that there are certain activities which are not in compliance with the law, so your registration can be suspended. So they will give an opportunity of being heard so that I can give my responses. Based on that, they can take a call whether to suspend or not. But now it's not clear. I'm sleeping in the midnight, I can get a mail that says your registration is suspended without giving an opportunity of being heard. That's the only amendment in this sub rule. So here it says, the proper officer has reasons to believe that the registration of the person is liable to be cancelled. He can now suspend the registration of such person without affording the said person a reasonable opportunity of being heard. Without. That's the notice. That's the amendment here in this rule. First pre-amendment they will give me an opportunity. No, an opportunity. Direct cut, connection is cut, right? Just like EB department, when you don't pay the EB, they don't give an intimation, nothing. It's like that department has become without an intimation, cut, right? Next. Rule 2A. 2A where a comparison of the returns furnished by. So this is a new insertion. This is a new insertion. They've inserted rule 2A. So sub rule 2 is 2A also they've inserted now. So where a comparison of the returns furnished by a taxpayer under section 31 with details of outward supplies in form GSTR 1 or details of inward supplies derived from the basis of GSTR 1 or such analysis show that there are significant differences, I will explain you, or anomalies leading to cancellation of registration. Now what they are talking about here, what they are talking about. See, here if you see, they are saying that when we analyze your section 39 is GSTR 3B, 3B and GSTR 1, we understand that there are some anomalies. What? Probably your liability under 1 is more than 3B, right? We saw previously also under cancellation. So liability is 1 is more than 3B. So earlier what happens? The officer will get a doubt, something is wrong, they will issue a notice or they will give you an opportunity of being heard. Now they will not. If they feel something is wrong, direct suspension. Sub rule 2 we saw, right? So here they are saying that if a liability in 1 and 3B is a mismatch, one liability is more than 3B, they can suspend your registration. Next, let's say example, your credit based on inward supplies credit where we get in 2A to B, right? In 2A to B, my credit as per supplies will file the GSTR 1 or IFF. Based on that, I will get my credit in GSTR 2A and 2B, right? Now, that credit in GSTR 2A to B is less than what I am availing in GSTR 3B return. So let's say my 2A to B is showing 60 lakhs, 60, and I have availed in my GSTR 3B return 1 crore credit. So the mismatch. So in that case, if the credit I have availed is more than the details of inward supplies which I furnished by the supplies, in that case again my registration can be suspended. So this sub rule has been inserted. In these two scenarios, if there is a mismatch of 1 and 3B and ITC availed is more than what is reflecting in 2A to B, my registration can be very well suspended by the department, right? The said person shall be intimated in prescribed form by sending a communication to his email address highlighting the said differences and anomalies, asking him to explain within 30 days as to why his registration shall not be cancelled, right? So there's a change here that rule 2, sub rule 2, they said will not give an intimation, but sub rule 2A they are saying if there are these two reasons, they will give an opportunity of being heard. Why? Because sometimes I will give a practical example. Let's say for the month of April, my liability in GSTR 1 is 1 crore, 3B is 60 lakhs. I paid 40 lakhs less. Next month I rectify this mistake. Next month my GST liability 1 is again 1 crore, but in 3B I have shown 1 crore 40 lakhs. So previous month by mistake I paid less tax. So in next month I am paying that tax. So there might be some genuine mistakes also. So 2A they made this also, they have inserted this also stating that if there are these two reasons, 1 3B mismatch or 2A and 3B mismatch, then definitely intimation should be given to the person because he might have some genuine reasons also. Generally they will not do as per sub rule 2, but 2A in this situation, 2A alone they will do. Yes, they will do it only in situation under 2A, that they will give an opportunity of being heard, stating their reasons. Within 30 days you have to furnish. If you furnish, satisfied, fine, otherwise they will suspend your registration. I repeat, because there could be genuine reasons because of these two reasons alone, so they have allowed. Next, a registered person whose registration is suspended as above shall not be able to make any taxable supply, shall not make any taxable supply during the period of suspension, shall not be required to return furnished return to section 39. Because if someone registration is suspended, he shall not be making any taxable supply, he shall not make any taxable supplies. 3 is inserted, news 3A, this is new insertion. A registered person whose registration is suspended shall not be granted any refund at section 54. This was already there, this they have inserted. I repeat, this was already there, this they have inserted. That if someone is registration suspended, he shall not be granted any refund as well. Fourth one, suspension of registration shall be deemed to be revoked upon completion of the proceedings with the proper officer. Why? Because if, let's say example, sub rule 2A, we suspended, we gave a notice, suspended, then he gave a clarification. So it's all right. So this suspension will be revoked. Why? Because I suspended because I have some suspect. He clarified. All right. Let me revoke the cancellation. That means let me activate his cancellation, activate his registration back. Now, for a new insertion, the subsequent registration may be revoked by the proper officer anytime during the pendency of the proceedings for cancellation if he deems fit. Last, where any order having the effect of revocation has been passed, so that means it is activated, then provision of section 31(3)(a) revised act invoice and first return in respect of the supplies shall apply. So, if during the period, if in case he has supplied, made in taxable supply, made in invoice supplies, then section 31(3)(a) invoice chapter, what is that? You have to issue a revised invoices, and when you apply registration, you get a first return to be filed, right? So, these provisions you will have to comply with if his registration is activated. Done with this, we complete the registration chapter. Now we go to the next chapter. Tax invoice, credit and debit notes. So now tax invoice, credit and debit notes, we are going to discuss about the interesting provisions relating to e-invoicing. With effect from 1st April 2021, all registered persons whose aggregate turnover in any preceding financial year, repeat, any preceding financial year from 2017-18 exceeds 50 crores, right, are required to mandatorily issue B2C invoices. B2B invoices. Now, e-invoice for all B2B transactions. See, probably I will mention here. So, if you see, if in any of these years my aggregate turnover exceeds, please note here aggregate turnover, that means pan India turnover. I might have multiple branches across India. ₹50 crores. E-invoice applicable. So, we are talking about financial 17-18, 18-19, 19-20, 21. In any financial year, that's the catch here. See, there is no amendment in this concept. Amendment is, it was 100 crores, they made it 50 crores. But I am just explaining this concept. Refreshing your provisions for e-invoicing because it's important from the exams. So, if any of this financial year, if my turnover was exceeded 50 crores, then from 1st April 2021, I am liable to generate e-invoice for all my transactions, liable to issue e-invoice for all my supplies, right? Now, for B2B invoices, not B2C, I repeat, only B2B. That is also an important point here. Only B2B invoices, not B2C. B2C, I will come to that. There is a separate portion of dynamic QR code, we will come to that. So, there is a detailed circular on that, we will discuss that. So, here it says, whose turnover exceeds 50 crores in the previous financial year, for all B2B transactions from 1st April 2021 from the current financial year, they will have to issue an e-invoice for all the supplies, B2B supplies. What is B2C? B2C means someone supplying to someone who is unregistered in GST. So, if I am, let's say example, a supplier, and if my customer is unregistered in GST, it will be called as B2C transaction. But if my customer is registered, it will be called as B2B transaction. One second. Right? So, B2B, B2C transactions. So, B2B, it will be applicable from 1st April 2021. Now, just for information, if you see, this e-invoice came in stages from 1st October 2020. E-invoice was made applicable if the aggregate turnover was more than 500 crores in any preceding financial year. Then from 1st January 2021 for 100 crores, and from 1st April 2021 they made it 50 crores. Right? So, in a staggered manner, in a stage-wise phase, they are bringing invoice. See, because 500 crores above, they will have proper ERPs, proper system in place. So first they made e-invoice applicable only for the large taxpayer whose turnover was more than 500 crores. Slowly they brought it to 100, then the 50, then probably next stages they will bring it to lesser turnovers also. Now, so 1/4/2021 it is 50 crores. So if your turnover is, someone's turnover is more than 50 crores in the preceding financial years, any of the preceding financial year, it was applicable. Now, someone can ask, what is an e-invoice? Let me just brush up the concept in next 2 minutes. See, e-invoice is basically a normal tax invoice, right? You upload on the invoice registration portal. So tax invoice, upload on IRP invoice registration portal. They have given the link e-invoice1.gst.gov.in. Likewise, they have given various links in which you can go upload your tax invoice. Your tax invoice in IRP, and you will get back invoice with QR code, right, embedded with IRN, digitally signed. So basically that becomes a e-invoice, that's it. So it's a normal invoice which I prepare. Normal invoice I upload in the invoice registration portal, I register there, so I get a QR code in the invoice, that's it. So I have to mention that QR code in the invoice. That QR code will be embedded with IRN number, that's it. Simple, right? So that's an e-invoice, simple. So these things are there detailed, your detailed syllabus. I'm just going to here discuss about amendment, but I just gave you a background about e-invoice so that you are able to appreciate the provision of amendment. So this limit has been reduced to 50 crores now, right? Now coming to dynamic QR code. Now what is dynamic QR code? All B2C invoices issued by registered persons agreed on the preceding financial year, any preceding financial year, I repeat, any preceding financial year from 17-18 onwards, exceed 500 crores. So above 50 crores e-invoice for all B2B supplies, all B2B supplies. Now here what they are talking about is from 1st December 2020, if anyone's turnover is more than 500 crores in any of the preceding financial year, I repeat again, any preceding financial year, like that 50 crores or any preceding, for B2C, any preceding financial year, if it is more than 500 crores, then dynamic QR code is mandatory. Now what is dynamic QR code? Dynamic QR code has nothing, I repeat, nothing to do with e-invoice portal, IRP portal, invoiceation portal, nothing. See, what is dynamic QR code? Let me give an example. So let's say example, for Diwali, you go to a shop to buy certain, let's say, crackers in a shop. Now, when you go to buy crackers in the shop, you buy crackers and let's say example, it is 3,000 rupees bill. You say, I do not have cash, plastic money, I have a debit card to swipe, or I will pay through Google Pay. You say, I pay through my app, Google Pay. So generally people will have, in the stores, they will have a Google Pay, the small board which will be there, you will scan and make payment. That is a dynamic code. Basically, that code is fixed. That is having embedded with his bank details. My shopkeeper's bank details. Anyone can scan that and make payment. You feed the amount and make payment. What is a dynamic QR code? It is dynamic. It is dynamic to each and every invoice. What happens here is, if I am generating an invoice, I am issuing an invoice, B2C transaction, my turnover in any preceding financial year is more than 500 crores. I repeat, more than 500 crores, more than 500 crores. And I am issuing a B2C invoice. In that case, dynamic QR code is in the invoice. See, there are a lot of payment gateways, Bhim app, a lot of apps are there through which I can generate a dynamic QR code for every transaction. Dynamic QR code is distinct. Why? Because it is dynamic. Why? Because every dynamic QR code will capture my date, invoice number, amount also. So let's say example, you come to my shop and purchase crackers for worth rupees 1,000. In that case, when I issue an invoice along with the dynamic QR code, you scan that code automatically you need not even feed the amount. Automatically it will capture 1000 rupees. That's the beauty of dynamic QR code. So it is giving an ease to you to make payment. I show the invoice, you just scan and make payment. That's it. You not even feed the amount because my dynamic QR code which I put in my invoice is embedded with my date, invoice amount, etc. So invoice amount is already embedded. So if you scan, automatic payment. That's the concept of dynamic QR code. I hope the concept is clear. I just wanted to explain what is dynamic QR code before I get into the provision of what they have said in this dynamic QR code, right? So dynamic QR code is unique for every transaction based on the transaction amount, invoice number. Dynamic QR code is generated for every invoice. Now I repeat, if let's example, let me ask a question. Someone's turnover is 400 crores the previous financial year, more than 400 crores. Are they required to issue an dynamic QR code for B2C? No. For B2B dynamic QR code? No, not applicable. Not required as per law. As per law, if it is more than 50 crores in any previous year, e-invoice is mandatory. Dynamic QR code, I repeat, has nothing to do with e-invoice. If for B2C transaction, no invoice applicable, no e-invoice applicable at all. But if someone's turn is more than 500 crores, dynamic QR code only is applicable, not e-invoice for B2C. B2C e-invoice is not applicable at all. But if someone's turn is more than 500 crores, for B2C transactions alone, dynamic QR code is required, mandatory. Dynamic QR code, no invoice. E-invoice is completely different, nothing to do with GST portal. Hope the concept is clear, right? So in this regard, they issued a circular clarifying certain things. Let's see. Non-applicability of requirement of QR code. So dynamic QR code is not applicable to the following suppliers. If someone is into OIDR services, supply of online information database access retrieval services. So let's say example, Netflix. I'll give a small example. See, this clause is already there in invoicing provisions, but I'm just giving a small recap also. So let's say Netflix. So as a student, studying, December exams, lot of hectic schedule. So you think of watching a movie. So Netflix, you subscribe, make a payment, watch a movie. Now, here supplier of services outside India and you are a non-taxable online recipient. Non-taxable online recipient. Basically, unregistered person, not for the purpose of business. So if I am an unregistered, non-taxable, see, I'm not unregistered, and for purpose other than business, if I am receiving some service from